Overall, the top line looking real good, with the revenues up 32%. What are the main drivers for this performance?
The main drivers obviously have been the significant investments we've been carrying out in our business. The farming division and the cropping division is up 187%. Our chicken and eggs division is up 68%. Our stock feed division up 50%. And our West African operations are up 45%. So quite a few divisions contributing to the overall growth in the top line with respect to the $128 million that we've achieved for the 6 months to 2012.
You have a tax provision on the edible oils division, so you have two reports, one on the core business and the other that includes it. Just explain that separation for us and how these two mix out.
Yeah, sure. The tax provision relates to importation of oil and an assessment carried out by the Zambia Revenue Authority in 2010. We had actually resolved the matter in 2010 through the Commissioner General giving us a full and final settlement, which was paid to the Revenue Authority. It was based on an audit carried out by the tax authorities in 2010. However, in January 2012, the Revenue Authority actually provided us with reassessment of the entire situation, and a tax assessment was given to us, which was basically the original assessment less what was paid and penalties and interest, which we have appealed against, and it is under dispute and been referred to the Revenue Appeals Tribunal. So we hope to have a decision on that in the not too distant future, but in the interim, we have provided for the entire amount in our financial statements. So because it relates to events that occurred in the prior year, we have chosen to present our financials with the core business as is for this financial year, which shows fantastic growth in revenue of 32%, gross profits increasing by 47%, operating profits up by 131%, and profit before tax up by 51%, and profit for the period up by 42% in comparison to the first 6 months of 2011. However, if you take the provision into account of $9.6 million, then obviously the growth factors are not as high, and we have actual loss for the period of $2.6 million.
Your fortunes are intertwined with those of the Zambian economy, so far looking good, but you're concerned about the weakening of the Zambian kwacha.
Yes, we are concerned with the weakening of the kwacha because obviously we do have foreign currency borrowings, which are, have a pricing that's slightly cheaper than local currency borrowings. Therefore, on that basis, because of a kwacha weakening, we do have exchange differences arising. However, we also have mitigants in the business with respect to our commodities, which are all priced in US dollars. And so we have assets, and we have assets that are priced in US dollars, and we have liabilities that are priced in US dollars. So there is a bit of a mitigation. But a volatility on the local currency obviously affects the way we do business. So right. It is a concern.
At the beginning of the year, you had a problem, but it's a good problem. That is of too much growth so that you're almost having capacity constraints. Is that still the case?
Yes, it is. I mean, we have had capacity constraints in most of our divisions. The supply issues have been there with respect to beef, chicken, pork, all the protein sectors. However, we are addressing all the issues by significant investment into infrastructure, finding new avenues to purchase raw materials and process further. So we have been significantly investing into our operations. The biggest investment we're carrying out, obviously, is in the Zamanita edible oils facility, where we're upgrading and expanding the crushing capacity in the solvent extraction plant, which takes our crushing capacity from 50,000 tons up to 100,000 tons, which provides us the impetus for the purchase of Mpongwe Farms.
Right.
Mpongwe Farms integration into the Zambeef cropping division has been fantastic. We've achieved a crop on soybeans in excess of 27,000 metric tons. So we have harvested the crop, and we think that the purchase of Mpongwe has gone very well, and it's providing us with a throughput for Zamanita's expansion. As well as Zamanita, we obviously doing expansion in our pork division. We've had a new processing plant put in place. We're expanding our dairy division by putting a new processing plant. We're putting up new chicken houses, both with respect to the broilers side and the layers side.
You read my mind and finished us off with the outlook. Many thanks for speaking with us.